Okay, so now we'll do some accounting for issuing common stock. You just have to be kind of careful doing these, but if you take them a step at a time, they're not so bad, kind of like a lot of accounting. So this is the information that you'd be given. We're issuing 25,000 shares of stock, so the company's issuing stock, our company's going to get some money. So we know, okay, so we get the date. We know we're going to be getting cash, so we can get that out of the way. And then we're probably going to be issuing some common stock. So it would make sense to, put that down. Now, how much are we doing? Well, 25,000 shares, and the market price per share is $5 a share. So we just multiply those out, and we're going to get, is this right? 5 times 25,000? Okay, so we're going to be getting $125,000 in cash. And we're going to attribute all of that to common stock because this has no par value. So that means that it's a very simple transaction, cash, common stock. This is not going to be your usual journal entry. Generally, the stock will either have par or stated value. And so we have to take that into consideration when we do the journal entries. So let's look at the next one here. We're issuing the same 25,000 shares, same market price of $5 a share, but now this stock has a $2 par value. So we're going to get the same amount of money. We're going to go 5 times 25,000 shares. We're still going to get 125,000 cash. But the only amount we can call common stock is the $2, the amount that would go with the $2 par value. So common stock in this case is going to be those 25,000 shares, okay, we're going to go 25,000 shares that we issued times the $2 par, and that's the amount that we can call common stock, okay, so we're going to have 50,000 of common stock, and then the rest is going to be paid in capital. I'll write this out once, I guess. Paid in capital in excess, and because it's par value, we'll say in excess of par value, and then you specify that it is on your common stock, okay? And so 125 minus the 50 means that 75,000 gets attributed to the paid in capital in excess of par value. Okay, so now we could do the same problem, except the stock, instead of having par value, has a stated value. So how is the journal entry different? Well, it's got a $2 stated value. We simply just have to say it's in excess of stated value. Okay? Common stock paid in capital in excess of stated value. And you do have to get those right. If a stock has par value, you call it par value. If you call it stated value, if it's stated value, you have to call it stated value. Okay, so that's the essentials of issuing common stock for cash. And the next thing that we'll look at is issuing our common stock for non-cash assets.